Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on the premium list at intothecryptoverse.com. The sale on the premium list will be ending on April 17th. So if you want to lock in the lower rate, make sure you go ahead and do so. Been out of town for a couple of days, but I'm back now. We did put out a couple of videos. One on-chain data, supply count statistics. The other one on, of course, the monthly update to the Bitcoin Beauty of Mathematics series, which was pleasantly presented by my wife, putting a new spin on the beauty of mathematics. But anyways, I thought we would get back into it, talk about where the bull market support band is today, where is the 20-week SMA, where is the 21-week EMA. Now remember, these levels always change, right? They're dynamic. They depend on the price action. And the reason they're important is because we know that altcoins do better when Bitcoin is above the bull market support band as opposed to below. If you notice, during Bitcoin's most recent corrections, altcoins are quick to recover to new local highs. But if when Bitcoin's below the bull market support band, altcoins are not nearly as quick to recover. So it's just basically a change in mentality, a change in sort of what the status quo is of the market. Now, as of this week, the 20-week SMA is currently at around 43.9K, and the 21-week EMA is at 44.3K. So more or less, the bull market support band for Bitcoin now ranges from approximately 43.9K to 44.3K. So it only spans by about $400 or so. Now, what's interesting though is that we've in fact had a cross of the 20-week SMA and the 21-week EMA. So the 21-week EMA has moved above the 20-week moving average. Okay. Now, clearly, that doesn't necessarily mean anything. Of course, one of the things to go check is, well, what has it meant in the past, right? Has it meant anything in the past? One of the things we can do actually is we can go over here to the settings, and we can plot the background color that I have here. And what this background color does, that you can sort of see faintly on the screen, hopefully you can see it. It just shows anytime there is a cross. Not necessarily the 21-week EMA going above the 20-week SMA. It could be the other way around, but it just shows when there is a cross. Okay, so we have a cross here. Remains to be seen what will happen. But again, this is the 21-week EMA going above the 20-week SMA. So the green line going above the red line. Here, it was the other way around, right? So when the red one went above the green one, it was not a good sign, right? It was not a good sign when the red goes above green. That happened over here in late November. But it also happened over here in April. So remember that, right? Remember that the next time, everyone's shouting that Bitcoin's going to the moon and everything. When you see red, and we warned about this back in April, right? We said normally after you see a cross, it only takes a few weeks before you will see some type of a breakdown. And we said we're going to have some type of summer lull where we need 3 to 6 months to trend sideways at prices much lower than the prior all-time high, because we were in fact ahead of schedule. So when we look at the other way, where red goes above green, like here and like here, that typically is not a good sign. Now, that doesn't mean it always has been a bad sign, but it's typically not a great sign when you see red going above green. And in fact, there have been times, of course, where it hasn't been necessarily a bad sign, but usually it's sort of just like these sort of fake crosses where the 21-week EMA sort of just slows down a little bit, not really off a parabolic rally. You can see some of those short-term crosses. But most recently, when we've seen these when we see red go above green like this in a very convincing manner, it has not been a great thing. But when you see green go above red, what does that mean? Well, the last time that green went above red, but what I mean by that is when the 21-week EMA went above the 20-week SMA like it's doing right now, it would actually corresponded to August, okay? So what happened in August, though, we had about one more week. We had, after the cross, which sort of like occurred here-ish, you can see that the price went up a little bit more from that point, but then we ultimately went back down to confirm the bull market support band as support before ultimately putting in a new all-time high. All right. We've also seen green cross above red other times as well. And if you think about it from just like a fundamental perspective, why does it make sense that green crossing above red historically is a good thing? Well, it's because the 21-week EMA reacts quicker to price than the 20-week SMA, because the exponential moving average weights more recent prices heavier than older prices. So it's going to cross the 20-week SMA if more recent price action is bullish. And if more recent price action is bullish, then everyone's feeling bullish, and there's a bias for everyone to feel bullish. So of course, it certainly makes sense when we're, that everyone's feeling bullish whenever you see green cross above red, because it more or less means that short-term price action has been bullish. Another time when the reverse happened, red crossing above green, occurred over here back in August 2019. And that was what we sort of warned about when it happened back over here. Right now, we're sort of seeing the reverse thing play out, right? We're seeing the 21-week EMA go above the 20-week SMA. Now, why is this important, right? Why is this important? Well, one of the things to think about, despite the fact that the bull market, that the 20-week SMA is going down, the price has actually been going higher. Or maybe better put, despite the fact that the price has been going higher, the 20-week SMA has been going down. And the reason it's been going down is because if you go back 20 weeks, you can see that we're still replacing, prices that were in the $60,000, $50,000 to $60,000 range with prices that are at 45, 46K. So again, if you think about the price difference there, you're thinking about maybe $13,000, $14,000, whatever it might be. And taking 1/20th of that, $700, 1/20th of $14,000. So $700. So again, you're going to see the 20-week moving average continue to decrease as long as the weekly price that's going into the calculation is lower than the one it was replacing. Now, I should remind you that it's not going to take that many more weeks before we no longer even are including prices up here. Again, if you go back 20 weeks ago, you're basically looking at the week of November 15th. But in only 2 more weeks, the price 2 weeks or 20 weeks ago would have been approximately $49,000. So at that point, the difference in the price, assuming the price stays the same, would only be a few $1,000s, and therefore, say 1/20th of $3,000 would only be like $150, because again, 3,000, 1/10th of that would of course be 300, so 1/20th would just be 150. So then the 20-week SMA would start to level off. So the point is over the next few weeks, assuming Bitcoin holds these levels, we would expect the 20-week SMA to start leveling off a bit. And then ideally, we would like to hold it at support like we did back in September of 2021. Now, one of the interesting things to look at here is that on this weekly test, on the most recent weekly candle, we actually had a wick. Guess where it went, right? I mean, it went down to, you guessed it, the bull market support band. And if we really zoom in on this, I suppose if we really zoom in, you can see that it went, maybe I can switch this over to the daily time frame so we can get a little bit more clarity. You can see that the wick here went down almost to the 21-week EMA. So on that day, we went down to around 44.1K. And we were, the actual 21-week EMA was literally just right below it. Okay. Actually, so if we went down to 44.2K and the 21-week EMA was at 44.1K. So we went to within $100 of the 21-week EMA. What does this tell you? Right. Well, there are some bulls out there that want to hold the line, right? There always are. And we always hope that we hold it, we hope that we hold it. And you can see that this is at least one test where we are, in fact, above it. One of the reasons why this is a good thing is that we've at least seen some follow through. Now, to be completely honest, it was not exactly the follow through we wanted to see. I would have preferred to have seen something like this, where you just get a couple more weekly green candles taking us higher, rather than just an immediate wick back down to the 21-week EMA. But you get what you get, and you take what you get. So we have in fact gone back down to the bull market support band, and we are in fact trying to hold it as support now. One of the reasons that it's nice that the 20-week SMA has moved down is because it means we have a little bit more wiggle room in the line in the sand that the bulls actually need to defend. Rather than having to defend, say, 44K or 44.4K, now we just have to defend 43.9K, or approximately $2,000 below the current price. That would be the level that we would need to defend in the event that Bitcoin sees some type of a pullback. So here you have it. We have the bull market support band. Bitcoin is still riding just above this level. If we actually go look at the log, the price over the 20-week estimate, you can of course see that, which also includes the 21-week EMA. You can see that we have flipped back to green now. So everyone's got a bit more kick in their step right now because the market's feeling a bit more bullish. We're no longer below the bull market support band. But make no mistake, I mean, the bears are still out there. I mean, I'm sure there will be more, attacks by the bears to try to get us below. The only question is can the bulls hold the line? And if they do, right, we typically go put in a new all-time high. Okay. But I mean, at this point in time, I think it remains relatively unclear because again, we just had one test, and usually the test can last weeks. I mean, like even in September, you can see that test lasted 4 weeks. Literally every week for 4 weeks, we were going back down to test the bull market support band. If you go back to August and September of 2020, it lasted approximately 6 weeks. Okay, so, make no mistake. Don't just think that 1 week is necessarily sufficient. I mean, it could be. If you go back to 2019, we didn't really test it at all. I suppose this is, there does exist a scenario where this is the only test you get before it goes higher. But do be prepared for more tests and for the bulls trying to hold the line. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember to check out the sale on the premium list. We're going to run that for a little bit longer, so make sure you lock in the low rate. You will get access to 3 weekly premium videos, the weekly newsletter, the Telegram alerts channel, the Telegram chat room, the risk dashboard. We have all sorts of on-chain charts, risk analysis charts, logarithmic regression charts, derivative charts, social metric charts, etc. Go check it out into thecryptoverse.com. As long as you do not cancel it, you can lock in the lower rate. Thank you guys for tuning in. Make sure you subscribe. If you're not subscribed, give the video a thumbs up. Click the bell icon to turn on your notifications, and I will see you next time. Bye.